Risk on resumes, data winning over virus concerns. Hi there traders, this is Steve Miley, the market chartist, for our regular weekly macro watch, updating here on FX Explained for the week commencing the 6th of July 2020. We're going to start by looking at the macroeconomic and geopolitical developments from the past week, from the end of June going into early July. And what we've seen is this indecisive theme that has plagued markets from the middle of June into more of a risk-on theme in here as we go into July. Markets have been caught between two competing forces. Increasingly positive economic data beating expectation numbers in here compared to the rising COVID-19 cases in southern US states and in various pockets globally. But what we've seen in here over the past week is the global data more supportive. We had market PMI data come through earlier this week for both service sector and also for non-manufacturing, manufacturing and the composite data in here on Wednesday and Friday this week. Alongside on Wednesday, the ISM data, the Institute of Supply Management data for the US. So we've had global and US purchasing managers PMI data, which has been very supportive, but pretty much the main driving factor in here was the breakout on Thursday to the upside for stock indices, more of a risk on theme when the non-farm payroll number significantly beat expectation numbers. Expected number consensus around 3 million jobs added. There were 4.8 million jobs added. So this spurred riskier assets to the upside on Thursday, with the US Independence Day holiday observed on the Friday. However, there is the ongoing risk and the ongoing concerns and worries regarding COVID-19 cases on the rise in numerous US states, particularly those southern states, California, Arizona, Texas, Florida, all very much in focus, and real concerns about that going forward, despite this more positive data, and particularly as well as we've gone through the Independence Day holiday in the US. Is that going to cause issues in the US with respect to cases and particularly hospitalizations and deaths going forward? Furthermore, there have been significant pockets of outbreaks globally in here. We've seen outbreaks in Australia, we've seen outbreaks in Germany, Tokyo, Beijing, and in the UK more recently, a local lockdown in Leicester. However, the UK lockdown rules have been further eased for most areas in here over the past weekend. We've seen the July the 4th reopening of pubs and with hairdressers, with cinemas and restaurants, all given the okay by Boris Johnson previously. And so we've seen this unlocking down in the UK despite these pockets springing up here and there. Staying with the UK, there continue to be negative soundings from the UK and from the EU on the ongoing Brexit trade talks. Let's take a look at how all of this has impacted global financial markets. So equity markets trying to break out to the upside, pushing up to the peaks that we saw in the middle of June in here through last week, getting a spur higher on Thursday after that data. So we're looking at the S&P 500 here, looking to extend the recoveries that we saw March through April and then again May through June. Are we going to extend these recoveries now into July? On the commodity currency front in here, in the FX space, we've seen the commodity currencies, the risk currencies, the Australian dollar, the Canadian dollar, and here we're looking at the New Zealand dollar pushing to the upside. Not quite as positive developments as we've seen on the stock indices, but nevertheless, the commodity currencies telling us that we're more in a risk-on theme, pushing up and getting gains versus the US dollar, here shown by the New Zealand dollar. If we actually turn to the commodity markets, however, we're getting kind of slightly mixed signals. Oil had previously dipped back lower, but the oil future now pushing back up towards recent highs. However, if we look at the copper chart in here, although copper has broken steadily through June into July to making new multi-month highs in here, we did get a setback at the end of last week. Let's move on to the week ahead, the week commencing the 6th of July. Well, US COVID-19 cases still very much in focus. Also looking at those outbreaks and those pockets of outbreaks that we've seen globally, but really those southern states very much in focus for the US, potentially impacting on US and global markets. On the central bank front, with our central bank watch, we have the RBA delivering their statement and their decision on Tuesday. And on the data front, we get market US non-manufacturing composite data for PMI data, and also ISM non-manufacturing data in here for the US on Monday. We had that RBA meeting on Tuesday, also with German industrial production. Nothing really of note coming through on Wednesday, the 8th of July. We get Chinese CPI data, consumer price index data on Thursday, alongside those weekly US jobless claims data. And we end the week Friday with the Canadian employment report. I'm going to wish you all a great trading day and also a great trading week. And don't forget to be safe out there. Take care. So traders, don't forget to catch us on the next FX Explained Macro Watch and all the great content on fxexplained.co.uk.